Thank you for being here on this lovely Sunday. Like I always say, you could be anywhere in the world, but you're here with me. So let's get some learning in on today's. Oh, got somebody else coming in. Let's get some learning and stuff done today. So for right now, we're going to get a quick review of what we went over the first 3 weeks, and then that's going to take like maybe 5-10 minutes, and then I'm going to jump right into the last couple of things we need to see on the option, so you guys can fully see how to trade the option and what it says, what it means when you're looking at certain things. And then we're going to talk about exercising the option today and selling cover calls. Question? Okay.
Your screen's off.
Oh, yes, ma'am. I'm about to share it right now.
Oh, okay. Right on.
1 second.
Sorry.
Oh, no problem. Here it comes. Okay, is Robinhood up for everybody?
Yep, I see it.
Perfect.
Yep.
No, I don't have dual screens.
It will say watch stream, and just watch the stream. You don't have to keep this screen up particularly. But if
Watch
you,
this.
yeah, you should be able to see what I'm actually looking at.
I'll see if I can log in here.
But you don't have to. You can, like I said, you can look at it at the video when we redo the video. I mean, when you're
Okay.
watching the video again, you know what I mean. You can just listen. It's no problem. So as we're going through the options, let's gonna get a quick recap. Let's pick an option. We're gonna go with Meta. Meta had a great last 2 days for everybody. If you was on that Meta play, fantastic. It ran $80 due to earnings, and they are dropping out a dividend now. So Meta went crazy. So an $80 swing in the option is lovely for the option trader. So let's go to this option list. And as we see the option chain, as normal, we have to see what strike price we would like. So the strike price is on the left side of the screen. This is new. This we're talking about this week is chance of profit. Chance of profit means you have a 29.90% chance that from the time you buy this, it will go green. Now, chance of profit don't mean it's gonna go to 100%, or as it changed this time, 2,700%. They're just saying, hey, if you buy it at 713, you have a 29% chance for it to go to 714. Now, if it goes green and nobody takes their profit, that's not their fault. That's not the chance of profit's fault. That's our fault for not taking the money. But this right here, just letting you know, you have 29% chance if you was buying the 480 strike for a call. You have basically a 30% chance of winning. Now you slide over to your break even. The break even is also a new number. The break even is plus 3.01%, meaning the stock itself from 472.90 has to move 3.1% before you get to your break even price. Now your break even price is when you purchase the option. Let me find the option that I purchased so I can get to that break even. See, here we go. I got one here. Okay. So when you actually playing the option and you have it up here, your break even price will show you the amount it is that the stock has to get to for you to make money. And not a lot of money. I mean, not a little bit of money, because you'll make a little bit of money on the way to the break even. But when it gets to the break even, you'll make a lot more money. So as you can see right here at the middle of the page, right near the expiration date, right underneath it, I mean, Meta break even price. So for me to break even on my contract, Meta has to get to 595 cents for me to break even. Now, when break even comes into play, that's when you have to pay attention to the theta to see how much, the delta, to see how much you're going to make per dollar. So as of right now, we're not near my break even price. So the delta really doesn't matter. But when I get to this 595, when Meta reaches there, I'll start making, if the delta was 21, which it is, every dollar Meta goes up, I'll make $21. So basically, that's what that is. Your break even. This number, the delta goes up higher the closer you get to the strike price the break even price. So right now, Meta is sitting at 472. So Meta has to run $28 for me to get to 500. So Meta ran $28 on the way up to Meta going that $28. Every dollar I will make 21. Every dollar Meta goes up, we will make $21. Now when Meta gets to that price, let me go to a different option. A little one closer to the money, so we can see how drastic difference closer to the money gets. So right before we was at the 495, that's the one I purchased. Let's go to the 425, the one I had this week. Now this delta is 97, meaning every time it went up $1, you're going to make $97 on that particular option. So that's where only time you really want to look at the delta when you get to that break-even point. That's when it really matters. And when it gets to that break-even point, you're looking at high 90s. Maybe this will say 1.2, meaning every time that shit move $1, you're making $120. So I had this particular contract. The delta was real low when I first got it. After it ran $72, my delta got up to $82 per dollar. So I sold pretty shortly after that. If I would have held on a little longer, instead of making the $4,000 I made, I'll be saying that 5,000 going into Monday. So that's your chance of profit, and that's the break even. That's the where you make the most money if you actually get to that point. And like I said, it's not like you're not making no money on the way up to your break even, because every time that shit moves $1, 50 cent, 25 cent, you're making money as long as it's going in your direction. The only time you're not making money, and if it's going in your direction, if you are way out the money, which we talked about before, way out the money, meaning the strike price is 520 and the stock is only sitting at 472. So that's basically a $50 move that it has to make to get way out here. It's not moving quick enough, basically, in the quote unquote algorithm terms. So your chance of profit is only at 5%. The stock has to move 10% before you just get to your break even. After that is, really child's play, because it's not going to get there by February 9th. That's basically what they're saying. Now, if it was a little closer, let me move down. The closer you get to the share price, which is down here, your break even is closer. Chance of profit is a lot more. But like I said, the further you go out, it's not going to be the same. So just keep that in mind. For the weeklies, if you're playing out the monies, because, hey, if you see somebody call out a 450, these 450s cost $2,600. Shit, who has $2,600 to spend on an option? If you had $200, you'll be like, okay, let me go to the same date that they called out, and let me get my $200 one, which would be this 510. Not saying you're not going to make as much money as the one that you seen called out, but you will definitely make enough to where that $120 might turn into $217. You'll get a good 80% return on your money. It really don't matter what you're playing, as long as it's going in that direction, away from the strike price that you've seen called out. It doesn't matter which one you're playing up here. You just definitely have to take that profit a lot sooner. If somebody called this one out and they're like, hey, I'm holding it a little longer. Yeah, they're holding it because they're a lot safer, because they're way under the strike price. When you're way out here and they're saying they're holding it, no, if your shit is up 10, 15, 20%, you definitely want to take it. You don't want to hold it too long. Basically what you're doing is you're building your pot up so you can get these ones way down here in the money. So you could feel safe. You can be on the safe zone. You know what I mean? So it's not going to be too effective to lose a little bit at one time. All right. Let me put that person in. Okay, here we go. Now, the next thing we're going to talk about is exercising your option. I didn't get to that, but you'll see it. Let's see where I want to see it at. I gotta go to my option. Exercising your option means you're going to buy all 100 shares at the particular strike price. So right here, my strike price is $4.95. You go to the right side of the screen, right under roll this position, you'll see exercise this option. Okay, show me this again. Meaning I want to exercise it. I'm going to buy all 100 shares for $495 per share. Let me dismiss this so I can get out there so I can really show you. So this is the option we purchased. If you want to exercise it, you have to buy all 100 shares right to the right side of the screen. These 100 shares, you're purchasing them at $495. So you'll be paying $495. $49,500 technically, if you want to purchase all 100 shares. Now, exercising the option is really for, I want to say, these lower cap stocks. Let me pull up a low cap so I can really break it down. Okay, here we go. NIO. NIO is a $5 company. NIO is the EV of China. I think it got up as high as 65, 70. It's just been shit in the bed. But NIO is a company that's $5. It will cost you basically $100. I mean, $554 to buy 100 shares of these. So if you went to the option chain and you're like, NIO's going to drop some more, so I'm going to buy this $5 option. Now it costs you $62. Now you have the option to buy 100 shares for $5. So when you purchase this particular option, you go to the exercise button where it says exercise this option. And now you can purchase all 100 shares for $5. So that will cost you $500 for 100 shares of NIO. Actually, it will cost you a total of $562 because you had to pay for the option itself, the premium price. So now go back to NIO. NIO is at $554. So if you exercise your option, it will cost you $562. But now you're sitting on 100 shares of NIO for $5. And now it's sitting at $554. So theoretically, you made you a couple bucks already by just exercising your option. The trick to that is you would like NIO to go back up to $8, $9 after exercising that option at $5. Because now 100 shares of NIO at $9 is $900. And you just bought 100 shares for $5. So now you just made $400 on that little $500 investment if NIO goes back up to $9. So exercising your options are for them penny stocks or them low flow stocks, or I'm even gonna say penny stocks, whatever one you can afford to exercise. Hey, have at it. You know what I mean? If it makes sense. And what I mean by if it makes sense, Meta went up $80 in one day. If you could have exercised your option, Thursday, say you purchased the option on here for $350. So you went to the option chain, you went way down the option ladder. It'll cost you $12,593, but you had enough money to buy that and exercise your options, meaning you bought 100 shares of Meta for $350. Okay, so now you're saying that 100 shares of Meta for $350. Then boom, the very next day, Meta runs up 20%. So you got 100 shares sitting. Meta ran 100%. You just made $8,000 in one day just by exercising your options, and you only had to lift your thumb just to exercise that option. Like I said, theoretically, if you had enough money and you can do that type of shit, go for it. But that's basically what exercising your option is for. It's just to get it lower than what it is, let that shit run, then you can sell it twice, basically. How many people exercise options? Probably like 4% of everybody who trades options. Not too many people do it. We're here for the money. The options, they go up, they go down. You get your money, you get out of it. The exercising part really don't matter. But I have to explain what it is, just in case, like I said, one day you guys are in a penny stock and you know it's going to run, and you're like, oh, shit, let me exercise this option. It's only $1. So you buy them 100 shares for $1, cost you $100. And then, 2 years later, that shit goes up to $400 or $500 because it's like the cure for COVID or some shit. You know what I mean? And now you're sitting on 100 shares at $500 a pop. So you're loving it. But like I said, options is you really don't have to exercise it. Greatest thing about it, like I said, options, you don't need to own the shares to play the option. So that's the way you do it for when you want to exercise your option. And now we're going to go over selling covered calls, meaning we're on the other side of the option. We talked about buying options for the last 4 weeks, how you buy it, how you sell it. We never talk about who you're buying it from. We're buying it from each other. So if you had 100 shares of any particular company, you go to the option chain of the company that you owned, and instead of up here where it says buy, you will go to sell. Meaning you are the seller of this option. Meaning with your 100 shares, you're going to rent your 100 shares to somebody for this premium price on the right side of the screen. Now, the difference between buying and selling the option, buying, there's basically unlimited upside. Period. I mean, you don't know what the stock can do. Don't nobody know it. I shouldn't keep going in that little 4 or 5 days you're holding that option. So you can make a big fathomable amount of money. But when you're selling options, all you can make is with the premium price that you're selling it for. So if you had 100 shares of Chipotle, and you're like, okay, I know Chipotle ain't going to get to $25.50 by Friday. You'll come in here, you'll hit the little plus button, you'll review your order, you will enter the price that you actually want it for. It says $52.90, you can put 53 or whatever. Hit continue. And then boom, this $5,290 will be credited to your account. And now you're just waiting a week for Chipotle not to hit this number, because if it hits this number, they're going to exercise your option. You lose your 100 shares, but you do get $2,550 per share. You know what I mean? They do give you that money, but you lose your 100 shares. But if it doesn't get to this number, you keep your 100 shares, but off rip, you're going to keep this $5,290. So selling options is basically not guaranteed money because, like I said, don't nobody know what the stock is going to do, but it's as close to as guaranteed money as it possibly can get in the stock world, besides buying and holding. So looking at any particular stock, if you had, a couple grand, you go find some cheap stocks like I normally tell everybody, Riot and Mara. They're pretty fairly priced, but I talk about these two a lot because they run with Bitcoin pretty much. So with them running with Bitcoin, you know which way they're going, up or down. So right now, you'll get you 100 shares. It'll cost you $1,115. You got 100 shares of these. You go to Trade Riot. You go to sell. And Riot's not going to run because Bitcoin got some bad news, whatever. The ETF got denied. Anything bad, it's not going to run to this number. So you hit this button, and now you got $25 credited to your account. Now, this $25 seems low. Like, hey, what I'm going to do with $25? It's not that it's $25. It's that it's literally just right to your account. It's yours. You don't have to do nothing for it except own these shares. Now we're looking at it as if you only own 100 shares. What if you own 1,000 shares? And you can do this with all these numbers. You can go, okay, 25. I can do this 5 times. I can come up here and do this 2. You know what I mean? So on and so forth. So you can actually come up with a paycheck or 2 just by selling cover calls that the price of the stock is not going to get to. So by next week, you'll still have your shares again just to do it the following week. Now, this is for selling cover calls. You can also sell cover puts It's the same thing. You know, if you know the stock is going up, you come over here and sell puts because you're like, hey, I know the stock is going up, so I know it's not going to come down to this. So boom, you put this in here. If it doesn't reach below that, you keep your 100 shares, you keep the money on to the next week. But selling cover calls is definitely, like I said, a passive. It's not a passive income because you actually have to do something for it. But it's easier work than trying to find what's running, what's not running, what meetings is going out. Is the Fed's talking? Is Joe Biden talking? Are they talking about the numbers of the job unemployment? You know, so there's a lot of stuff that goes on with the stocks going up and down. But when you the person selling cover calls or covered puts, ain't shit really matter what's going on in the world. You just want to know which one you're gonna sell. If somebody's talking good, you know you're gonna go sell your puts. If somebody's talking bad, you gonna go sell your calls. You know what I mean? Because the stock is gonna go down, and then vice versa. Like I said, you don't want it to get to your strike price when you're selling the cover calls. Just like the opposite, when you're not selling cover calls, you want it to get to that strike price. So those are the two ways back and forth where if you're buying, you want it to go to the strike price, but if you're selling, you do not want it to go to the strike price. That is the art of selling cover calls. I know that was quick, but it's really self-explanatory after you get the hang of it. Accumulate you some shares every time you have a win. You know, take your money out for taxes, you know what I mean? Tax purposes, you know, 15, 20, 25%, depends on where you live. You know what I mean? You got to find that out. But if you win 1,000, you know, put some tax money away, put enough money away for you to continue trading, and then put some money in some stocks so you can start selling cover calls, you know, down the road. Because it's not a race, you know, and nobody's gonna get rich off of just one trade. You know what I mean? This is a marathon. We have to have consistently good trades per week. And not saying we're gonna win every trade. Because if anybody said they're gonna win every trade, they're lying. You know what I mean? You're gonna lose a lot, and it's okay. Just don't get discouraged. If you get discouraged, oh well. The money don't care if you're discouraged. The money don't care what it don't matter what you're feeling. If you want to continue trading, you want to be a real trader, just understand you're going to take losses. But like I said, with the wins, you want to accumulate more assets so you can start selling cover calls so then you don't have that stress of, oh my God, what's it going to do? Am I stuck in it? You know what I mean? It's going to expire, worthless. Just everything that goes with the emotional roller coaster of trading options. Now, my trick to trading options is after you lose enough money and make enough money, it is what it is. I take my losses like I take my wins. I'm like, okay, I lost, on to the next one. Okay, I won, on to the next one. It's always on to the next one. There's no holding you back. There's no if you coulda, woulda, shouldas. You know what I mean? Either you was in it or you wasn't in it. And it's just like going fishing and somebody saying they caught a big fish, but you didn't take the picture. That shit ain't happened. So it don't matter what people are doing because guess what? It ain't our money that's in everybody's account. So if you feel like holding something because you think it's going to go up and it goes the opposite way, that's nobody's fault but your own. And guess what? But if you listen to somebody and you're making money by what they told you, that's still you. That's on you. It ain't got shit to do with the person told you. You know what I mean? This is your money that you're playing with. So everything that you're playing with, we're just trying to guide you so you won't lose as much money. You know what I mean? Because shit, ain't none of us really professionals. I just lost a lot, just enough to let y'all know not what not to do, so you won't lose as much as I did. But moving forward, sorry about that little rant. I just know a lot of people say everybody wins, but I lose a lot. I think I lost like $4 grand. No, let me rephrase that. I lost like $3 grand last week in the futures market. That's crypto futures. I think I lost like maybe 8 to 1,200 in options last week, which you know for a lot of people that's a big hit. For me, it is what it is. Came back though, you know, brought my account back up to over $4 grand. But this the one that I started the beginning of this course with. I only had $180 in this account. So we're in week 4 and I'm already up to 4,000. I'm trying to get this to 10 by the time the class is over. This to show y'all it's not options is really not that difficult if you know how to, you know, take your profits, keep building, cut your losses quick, and keep it moving. So right now, let's go back to the Discord because that's where most of all the action comes into play. The reason why I do all my classes with you know, if you sign up for the Discord, you get a discount on the class or whatever, is because if you don't know what you're doing or you don't want to really, I don't have time to look at charts. I have to work. I got kids, you know what I mean? Whatever excuse. Everybody has excuses and they're fine because guess what? I got kids. I got to work. So I understand every excuse that people give us. That's why this Discord is made. You know, so we come to the Discord. Always check, you know, the daily news, morning watch list. These channels will put you in the right direction. Like I said, if you don't want to really look up nothing, just come see what's out here. See what's in the world. Keep forgetting this doesn't go full screen. Let me go full screen on this one. Nope, still not. But you come here. This is crypto stocks. This one says Plug Power, and down here is Trug. It says 30%, so it's gapping up. I really can't read it because my eyes is bad, but this is the news that you would need to find every particular stock that is moving. One second. There we go. Move up a little bit. Go to one that I can see. Aha, here we go. I know I can see one of these. Okay, so if you can't read the daily news, go to the morning watch list. The morning watch list does break it down. It does give you, well, it do give you different levels of price points to get it at. What this means, bounce levels 178. If it bounces off that 178.50 to the upside, you can go for a $200 call for February 9th, and definitely take your profit when it's going up. Have that set limit, 5, 10, 15, 20% in your head, what you want to take. But like I said, if you don't want to go out looking for the plays yourself, it's right here. And these are weekly options. So this is a decent price point to where it's like, okay, I'm looking at it right now. If Tesla's at 180, you're like, okay, I got some time. Let me wait for it to come down to 178. And then boom, you go in there for your call. So the morning watch list is a must. Let me break this one down to you. It's the average true range, meaning that usually SPY can move $3.90 a day. We already went over the delta. So you'll know if you have a high delta, if a delta is at 90 or 100 or 1.00.90, a $3 move, that's $300, $270, you know what I mean, in your favor. Q's has a $4.93 average true range. So these dollar movements, like I said, them high deltas, these are big movements for us, for option traders. So you come over here. So right here for the SPY, a 490 call, a SPY holds over 488.10. Let me bring up a chart. All right. So right here, let's get a 490 call. And SPY is over 488.10. This is out at 9:16 in the morning, so right before the market opens. SPY was over 488.10, which is this candle right here. And if you would have bought the call at 488.10, because SPY ended up going over that, this candle closed over 488.10, and you could have rolled it this whole way. And actually could have still held it, and right now still be making money. But how much percent is that move? If we was in the option and we bought the option here, bought the option here, and it went up to here, and you held it. So that's 1.47%. So that's a big move if say your break even was only 2% away, and it just moved 1.47% in that little span of time. So right then and there, it's like, okay, boom, you're making money. You probably made 15, 20% just how the options work, just for that 1.47% move. So this, like I said, it's always good just to come check out the morning watch list. They have 1, 2, 3, 4, 5, 6, 7, 8. There's 9 different stocks on here. All of them have different price range for options. Tesla, Nvidia, Netflix, Microsoft, Meta. They're pretty expensive, but hey, if you want to get good returns, these are the ones that you really play. If you want to get solid returns, SPY, Qs, Amazon, Apple, Google, no problem playing with them. But right here, as you can see, Nvidia has a $16 average true range. Netflix has a $16 average true range. So that means a $16 in option world. If you have 1.00 delta, $16 is basically $1,600 you just made from one day picking the right option in the right direction. So we'll check out Nvidia too. Let's see, 620 call if it went over 617.50. So we're gonna pull up Nvidia. Got it over here somewhere. I can just type it in. And as I'm going through trading view next week, if you guys have a trading view, please, if you don't have one, please get one. I have Queen coming on, showing you all the ins and outs of trading view. So you'll be able to have different charts because I'm going over some indicators next week for you guys. So she will be going down every last little detail on this thing. All the stuff on the left-hand side of the screen, all these little indicator buttons, the alerts, replays. She will be breaking that down off for you guys next week. Okay, so back to the Nvidia play. She put up call if it's over 617.85 and the put if it's under 609. So let's go look at the chart. When she called it out in the morning, it was over 617 when she called it out because it gapped up in the morning. You could have got the call, and you're still making money from that point she called it out, or from the time you got it till right now with no problem. So going back to the Discord, that's basically how this section of the Discord is ran. It will tell you who's talking, what's going on. That's the news that affects this news right here affects the market. Some of it, not all of it, but it definitely moves the market one way or another. But this is where it comes. Like I said, if you don't have enough time to actually sit down and really go over what's going on. Let's go to notable earnings. Earnings is a big thing. That's what, like I said, Meta was earnings play. I had AMD earnings play and the Microsoft, and both of them shit the bed. They beat their earnings, but the stock didn't perform as well as the earnings did. For Meta to perform like it did, it would drop the bombshell that they're giving out dividends. Now I'm thinking their dividend is going to be a pretty hefty one. I don't think it's going to be no lightweight dividend. It's definitely going to be a pretty nice sized dividend. So that just boosted the stock, and they beat their earnings expectation by 17%. So anytime somebody beats this shit by 5%, they usually balloons. They took it by 17%, so that's fucking great. So for the week coming up now, we got February 5th, which is Monday. So before the market opens, meaning if you bought these Friday, you can probably get a nice gap up or a gap down. But Caterpillar, McDonald's, some big earnings. Let's see, we have aftermarket. Nothing really big for Monday. Let's see, we got Tuesday. Spotify, that's a good one. We'll have to pull up that chart before we get off this call because that looks like something I'm going to try to get into because they move a lot. Let's see what else we got. So that's good for Tuesday. Go to Wednesday. Uber, they have cheap options and they move pretty good. I don't know how they're doing. I have to definitely check them out. Oh, Roblox has earnings Wednesday pre-market. That's a sleeping giant right there. If anybody has a kid or a grandkid or a nephew or just a badass little niece or something, you know they play Roblox. So that's definitely a good one to look at for earnings. Let's see what else we got for Thursday and Friday. See Thursday, nothing major. Friday, nothing major. So earnings is always a good thing to play if you have balls of steel, or if you just want to make a quick buck and hope for the best. But the earnings will gap up or gap down, meaning it's going to move maybe $4 right after, right after the earnings are played. $4 up, $4 down, $5 up, $10 down. It's just going to move one way or another. It's not going to go in the middle. So that's a good thing about earnings. Other plays to look at, like I said in the Discord, the swing plays. They're called out. Meta 520 call 29, entry 117. Just so you guys can see how it is. There's nothing wrong with saying, hey, what are you playing? I see it, but can I really get a different option? Yes, you can. Like I said, you can get whatever one you can get. Grateful, she's been killing it. And we had another person in here, Iffy. I see her screenshots. Iffy's been really doing good. Been seeing her shit pop up in the checkmates. And we got a couple other people. But whatever you can get that we call out, just make sure you get that date. You know what I mean? Like, if we're calling out shit for the 9th, get something for the 9th. If you can't get the one we call out, this one says 142. Go get the 145. Go get the 150. But definitely get the 9th. Don't try to get the weekly or, go closer to the, away from the strike price just to get closer, for the date. Because that daily, the 3 days, 4 days, those shits hurt. That's where the delta comes into play. I mean, the theta. Every time, these are contracts, so they lose money as soon as you buy them. It's just like a car. As soon as you purchase them, they start losing money. It's called time decay. So the longer you have it, the more money you lose, in a nutshell. So you don't want to get the weeklies because then you lose money real quick. You get that second week out, you're not losing money too much. You know what I mean? Get that third week out, it's even smaller. You know what I mean? So on and so forth. So here we go. Here's an example. I got a 420 call, holla. That's what, it was meant for me to get that one. So I got the 420. I'm grateful got the 455. She still had a 1,700% return. Average cost $86. Current price $1,478. I paid $560 for this one. Total return $3,718. So, like I said, you don't have to get the ones we're calling out. But if you want to get something, just go same date, out the money. Okay, now don't forget, if you are a part of the Discord, if you need any help throughout the week, come to the live schedule, ask for a day. Queen would definitely set you up with somebody that can help you. She looks at this every day. And like I said, if anybody needs help, put your name here, what you need help with, and Queen will put you with the right person. If you need help, like, hey, how do I just find a play for myself? You know what I mean? We'll definitely get you on track with that. And don't forget, my channel is down here too, King Flex. So I do put my plays in here. I got a 3.5% challenge going. And it's really not a challenge, it's basically discipline. You know what I mean? I'm using one amount of money, compound reinvesting, and putting that whole amount back on my next one that I'm getting, the next play that I'm getting. So it's really about being disciplined and just making sure, okay, if I grow this $100 to 2,000, I can grow this 2,000 to 10,000. Then I can grow this 10,000 to 50,000. You know what I mean? You're just really making sure you can always make money. Like I said, it's a marathon. We're not in here to race. I'm fat as hell. I can't run that fast no more. You know what I mean? I'm ready to walk around the track. Oh, let me get this out of here. I don't know how that got there. All right, let me check this real quick. Sorry about that, folks. But, okay, that's up. Are there any questions so far about anything I said? Let me pull up the Zoom so I can see if any questions in the chat or anything. Nope, no questions in the chat. Okay. What's a safe break even to use as a standard? A safe break even, you don't have to look at that. if you know the stock is going in your direction, it don't matter. It could be a 10% break even. You know what I mean? If there's good momentum on the stock or good news or shit, I called it out. I'm like, yeah, this is going this way because we follow the money. Off rip, it's like, it's like everything coming together. Like the Red Sea when the people was in there and, it just closed on them, So 1% is great. 2% is even better. Shit, 0.56% is amazing. Or the best ones to get where it says negative 1.2% for your break even. That means you're so far down the food chain. As soon as you purchase that option, you're making money on it. Let me pull one up real quick. Meaning no matter what you went to, you're in the option chain. Let's see, break even. These ones right here. Look at that. 0.15% till you get to your break even. So it's not even, the stock doesn't have to move a percent for you to get to your break even. So it doesn't matter, you know what I mean? If you're way up here, you're like, okay, this is 8.49%, but you just gotta look at your strike price, 139. Okay, how much time do I got for it to get there? If you have 19 days for you to get to 139. Let me get one that's open. Or 140. And it says 12% for your break even. That's when you just go to the stock and see, can it get to that 139? Go back, check the month. Oh, then you see on last month it was up there already. You know what I mean? So it did hit the 139 before. It's only $9 down from that particular point. But you do need time to cook because that was back in January 11th and we're all the way at February. So it didn't get to that point since then, but it does have the potential to get up there as long as you have time for it to get up there. So like I said, as long as you give yourself time, it don't matter what that break even is. And especially if you're looking at, hey, I'm only looking for 10, 15, 20% of this particular option. Oh yeah, it don't matter what that is because you're just going to take your percentage when it gets there. Any more questions on the battlefield before I go over these sectors of stocks that we all know and love? Okay, so moving on. Just want to let everybody know there are 6 types of stocks. If you didn't know, I'm going to let you know. You got your blue chip stocks, your growth stocks, your dividend stocks, your cyclical stocks, your defensive stocks, and your speculative stocks. All that's meaning is blue chips are the well-established companies. Basically Coke, Pepsi, Johnson & Johnson. Those are all blue chip stocks, great companies. They ain't going nowhere. They're always going to be around. Now, your growth stocks, they move faster than your average companies. They might not give it dividends, but you know what I mean? Holding them, you'll probably make more money quicker. Not saying long term because we don't know how much, backing they have, but like a growth stock will be like an Amazon, Google, Twitter, well, X now, Netflix. Those are all considered growth stocks because they all had more than average growth over the time they've been on the market. You got the dividend stocks. AT&T is a monster. Been around a long time, and they always give out a dividend. Johnson & Johnson. Ford. PSEC. PSEC is a monthly dividend. You got, O Realty. That ticker is O. They give out a monthly dividend. Great stock. So you got your dividend stocks. Then you got your cyclical stocks. Those are ones that's follow what the economy is doing. So if the economy is doing good, they're doing good. If the economy is doing bad, guess what? Them bitches is doing bad. Those like your banks, cruise liners, hotels, and shit like that. So anytime, oh shit, the economy's going down, go in there, go find you some puts on some of them type of stocks, and make you some money. Or hey, the economy is booming, go in there, go put you some calls on it. You know what I mean, to make you some money. But those are the cyclical stocks. Then you got your defensive stocks. Those are the stable ones, regardless of what anything's doing in the world. These bitches are going to stay level because those are like Walmart, Target, McDonald's. You know what I mean? Let's see, what else they got? You can even call Lowe's, Lowe's and like Home Depot. Because no matter what's going on in the world, people are still going to fix the shit that breaks in their house. People are still going to take their kids to McDonald's, even though that shit's disgusting. You know what I mean? I still go there, even though I know how bad it is. That shit's quick and easy. But Target, it's always going to have some people in it. Walmart's always going to have somebody there. So no matter what's going on in the world, those are defensive stocks. Those are good to have in your portfolio because guess what? They're always going to grow or they're not going to lose too much money at once. And then last but not least, we have our speculative stocks. Those are the ones like your Beyond Meat. Oh, I got you, ma'am. I'll put the list out. I'll send it I'll have it probably next week, or I can just email it to you, but I'll definitely get it to you. The next one is the speculative stocks. That's Beyond Meat, Uber. Shit, you can put Tesla there for speculative. Don't nobody know what they're gonna do. There are a lot of risks, but everybody see the potential that they have. Now, the reason why I'm giving you these 6 types of stocks, because that's what the stocks are, but you can see what the world is doing and then go find that particular sector and play them stocks. You know what I mean? Like I said, the world's going to shit. You want to go play you some defensive stocks, some dividend stocks, or some blue chip stocks. So you know those are all good companies. They're not going to go too far down, whatever, but you'll be able to make some money on them in the option world. Now, if everything's going great, shit looking fucking healthy, then you want to go play your speculative stocks. You know what I mean? The ones that, hey, we don't know what it's going to do, but it has potential. But the world's doing good. The economy is booming. So these ones people might put their money into. So, like I said, if you want to look through that list when you're just combing through shit, or even when you're looking at the morning watch list, if you hear what's going on in the news on your, morning ride to work, well, okay, that's going on. She's playing this. That's that part of the cyclical. That's part of the blue chip. Okay, I can play that. Let me go check it out before I go into my job. You know what I mean? Because that's what the main thing about why we do this and why we teach options and why I teach futures. And we want people to understand you don't need that 9 to 5 when you're diligent doing this right here. You know what I mean? This is gonna take some time. I still fucking work. You know what I mean? My wife don't work, but I still work. And I just not making enough money consistently because hey, I live on the edge, you know what I mean? I might put that $2,000-$3,000 on a fucking option to 4,000, and that shit go right right the opposite way. You know what I mean? But I do that type of stuff because I got a job, so I can always put some money back in my account if I need it. You know, my wife plays a little more diligent because she ain't got no job. You know what I mean? This is her job, so everything she plays is I'm taking my 10%, 50%, whatever. You know what I mean? I'm cutting my losses at A, B, and C. She has to play that way because she has no backing. The market is her money. So if you have a job, yeah, we have a little more leniency. But if we actually trade like we don't have a job and trading is our job, we will do a lot better. You know what I mean? Because like I said, that's my biggest problem is I know I can put some more money back if I really need to. I hate doing it, but if I really need to, so it lets me play on the edge a little more. But I've been keeping it more kosher because this is my last year of working a 9 to 5. I told my kids I will be retiring December. If I could do it before that, great. You know what I mean? If I get a couple more options like I did this week, I probably damn sure will. But yeah, this year will be my last working a 9 to 5 because I do make a lot more money in options and futures, whatever. It just I have to be home to do it. You know what I mean? It's hard trading when you're on the ladder. You know what I mean? I know people have desk jobs. I know people, just have fucking mad random jobs where you can't be on your phone or have your computer in front of you. So if you can get to that level where you can have your computer in front of you, remember it's a marathon. You don't go broke taking profit. So always take that profit on to the next trade. But like I said, as workers, we try to get that one big lick. So I'm quitting today. You know what I mean? I'm upgrading the customer. I stay telling my boss every time I walk in the plantation. I'm like, this is my last day in the motherfucking field. Yeah, I come back because shit, I ain't hit nothing that day. But you know what I mean? That's my mentality every time I go to work. This is my last day here. All I need is one good one or a whole or 4 or 5 good ones. You know what I mean? But one good fucking one. Oh yeah, I'm done. Give me a $50,000 option that I made in one day. I ain't never going back to the plantation. I'll break that shit down so quick and fast to where my bills is paid for at least 6 months. I got me 4 or 5 options that's deep in the money, like 2 months out, and that's it. And pluck them bitches off as the time goes. But Other than that, that's all I have for today. Like I said, next week we'll be having a trading view. I will drop that list for anybody. Queen will be gracing us with her presence next week, so I can't wait for that. And going over everything on trading view so you can have your charts up. I will be going over some indicators next week. And basically the whole week will be about indicators and trading view. Just so now you can go to when you're in the bathroom or sneaking off in your car to smoke your cigarettes, what I'd be doing. Pull up your phone, look at your trading view, see what the charts is telling you. Try to find yourself a trade or jump on Discord, see what everybody's playing. Go in there, make the trade, and make some money while you're at work. Let's see. Oh, yeah, you get the replay, Bam. That ain't no problem. Gotcha. Any other questions before I skedaddle? If not, you guys know where to find me. I'm in the Discord. Don't forget you can email me any questions at Cheeks Van Houter. That's CheeksVanhouter at iCloud.com for any, random questions. But other than that, I'm always in the Discord. Pink Flex is the channel. Hit me up with a question. You can shoot me a DM. I might see it. Sometimes I don't check the DMs. I'll be forgetting that I have DMs in there. But like I said, you can definitely find me in there for anything. But other than that, you guys enjoyed the day. Happy you guys came out. And I will definitely see you next week. We have 2 more weeks left. So let's make some money this week and next week. Oh, matter of fact, before we leave, let me give you my list of stocks I'm playing this week. I am looking at just putting them out there. I don't have the price points like Queen has. You know what I mean? I'm just going to let you guys know what I'm looking for. So I'm in Meta, META. That's the first one. I'm already in it. I'm hoping to sell that Monday morning. Then I'm looking at NVIDIA Play. Looking for a call if it keeps running. Obviously, if it turns around, I'm going to go for a put for NVIDIA. I'm also looking at Google because Google been running and it's been holding. And their contracts is not too much. And like I said, I'm going to try to play those earning plays that we're talked about. I won't be able to hit McDonald's up because they're Monday morning. But Roblox is definite. Like I said, I'm going to try to chart that tonight too. So those are the ones I'll be looking for this week. And if I make some more money, I'll definitely let everybody know in the checkmate section. I need a recovery from last week. Oh, we got you. What do we need to recover? Hit me up in my channel. We'll talk about that.
Cheeks,
Yep, I can hear you.
how are you?
I'm doing fantastic. How you doing?
I'm good. I also need help, honestly, with just using the Webull platform in general. I
Oh,
know that when we hear you do sort of switch between channels. Right now, my biggest issue is when I'm placing trades. And I prefer using my laptop instead of using my cell phone.
okay.
The whole Greeks thing does not show up whenever I'm placing trades, you know? So I never really get to view the volume and the delta and the theta, which I know that you said we don't really need to pay attention to that as much, you know?
Yeah, but you want
Uh,
to see it.
yeah, yeah. I don't know, just the whole Webull setup right now. I don't know, maybe it's because I'm not yet used to it.
Oh no, we was a little freaky. They've been opening up. I mean, not opening up. They've been updating it back and forth lately. So everything is
Yeah.
kind of mixed in. So when you go to your option chain, you have to scroll out. It will say, like right now, I got it up on the chart. This one is, I don't even know what option I'm in. Oh, this is O. But right now, if you look at it, you got open interest value. Same thing as Robinhood. Keep going. This for your calls on your left. Then you have your puts on your right. Now, for when you want to buy one,
Hmm.
it moves over to the right side of the screen and gives you all this stuff over here to the right over here. So the way I have it set up, I don't have none of the Greeks and stuff showing just because I just want to see the chart and what option I'm in. But you can go to settings right here and it'll show you different things that you want to show on your charts. You know what I mean?
Ah, yes, I see.
So you go for that one, and let's see. For options, you got your filters. You can filter it whatever way. But like I said, you want to see the Greeks. I think that comes up after you buy a particular option. We will get on during the week. I will buy an option on Weeble, and then we can walk through it that way too. Because I haven't bought an option on Weeble. I've just been using this for the dollar cost averaging challenge I've been doing. But I will buy an option out here this week, and like I said, we will jump on Discord, and we can go over it together. But yeah, like I said, it did do something freaky because back in the day, it did have option trader and stocks on the left side of the screen. It was just stocks, and then when you clicked on the stock, you went to the option. You know what I mean? Like down here, see, it says right here option. So when you click on it, you basically have to buy the option to get to see the Greeks. You know what I mean?
Yeah.
It's not
And that's
showing.
almost like a bit late.
Yeah. Well, matter of fact, here you go. Hold 1 second. Let me put it on. Let me exit out of this. All right. So right here, right next to implied volatility on your laptop, you have this little the list right here on the side. Type in delta, theta. Those, like I said, those are two important ones. Click OK, and they should show somewhere. Let me scroll this over now. Yep, there they go. Popped up right here for you. So now you can see your delta and theta without buying an option. So it's right here, right under calls. This little, drop down list. Available items. They're probably not checked, so make sure you check them. And then it will come over here. You can take off whatever you want. You know what I mean? But like I said, delta and theta are the two most important ones. Delta is when it's going up, how much you make. Theta, when it's going down, how much you're going to lose. But if you're like everybody else, when we play a play, we expect it to go one way, and that's the way we picked. So we don't care what it said when it's going to lose. We just want to know how much it's going to make when it's going up.
Okay.
But that's where your delta and theta is right there. Like I said, just make sure you check the boxes on here, and then they will pop up. When you scroll, when you slide this over to the left and right. Like I said, one side is calls, the other side is puts. That's another thing that's, kind of different. Up on the right side of the screen is where your weekly is, which day you want. But when you pull it up, both sides will come up at their strike price. So it just depends on what strike price you want. Let's see, where's this price of this stock? I'm in Tesla now. Okay, so if you want to out the money Tesla, and Robinhood it goes up, but this one is just going down, so you get a 200. You don't want to click on the right side because you want to call, so you click on the left side for a put, and then you buy or sell. But it's probably not working because it's after hours. But yep, that's you. Double click on that, and then it will pull up to the screen where it's going to say how many contracts, how much you want to put on it. But at least right now, like I said, you have your delta and theta right in there too.
Okay, thank you. One last thing that I just want to be sure I'm doing the right thing.
Yep.
So when you or Queen gives us a play, right?
Yep.
And I know especially with Queen, then she'll say that we must try and get in below her entry.
Yep.
So on Friday, I went in below her entry, but then I started doubting because I went in on an option 3 levels down below her entry. Is that okay? Or should we rather take the one immediately below her entry, or it doesn't matter?
What she means get by below what she pays for it. So if she's paying, if this contract is, how much is this? $400. So say she purchased it for $400. What she means is you're buying the same contract, but try to get it cheaper than what she did because she bought it before she alerts it. You know what I mean? She sees what it is doing. She's already in it. So 9 out of 10, when she gets something, it usually loses money when she gets it. So that's what she means by get it lower than her. Not meaning go for a different strike price, unless you have to go for a different strike price. But if you have the amount that she's using, or I'll go down here, if you have $200 and she spent $207 and she's saying get it lower than her strike price, that means hey, try to pay $190 for it or $195. Try to catch it on a little pullback, but it is going in the direction that she called it. So if she calls a call, even though it went down a little bit because everything goes up and down, she's saying it's going to go back up anyway. Just try to get it cheaper than her. Now, when I call something out, oh, you should try to get in as soon as I call it out. You know what I mean? Because 9 out of 10, my shit ain't never coming down. It's going straight to the moon. Every now and then it pulls back. You know what I mean? I ain't playing, but most of the time I call something, I'm shooting for the moon. So as soon as I get it, it's gone. So if I put my number in it, I pay $200 for it. By the time y'all see it, it'll probably be like $220, $230. And 9 out of 10, I'm probably pulling the trigger to get out of it by the time anybody sees it. But I know it's still going in that direction. You know, because having a cash account where you can just trade unlimited, you know, whatever money you have in your account, you can trade that unlimitedly. So if I have $1,000 and I'm doing 10 trades at 100, I can do 10 trades, just boom, I'm in and out, in and out, in and out. But for the people that have the margin accounts that only have three day trades, they really can't do that type of shit. You know what I mean? You literally got 3 trades and you're swinging everything else. I do have swing trades, and we do call out swing trades. Those are the ones that you don't have to get as soon as we're getting them. You know what I mean? Those are the ones you can wait a little bit. If we're saying, hey, this is a swing trade, meaning we're holding it for maybe a week, 3-4 days, who knows? But we're definitely not getting rid. We're not getting rid of it that day. As long as it's not that day we're getting rid of it, you can get in it almost at any price. But if we're getting rid of it that day, whatever price you see is at, you have to get close as you can to that price. If not, 9 out of 10 it'll be a dead play. But I know
Okay.
Queen alerts it that plays. You know what I mean? I might not have enough time to alert. Friday, I have no reception where I was working at, so I couldn't alert my 3.5% play. I have reception in the morning. So, like I said, for me, if you take any trade of mine, try to get 15%. Don't lose no more than 8%. And keep that in the back of your mind. If I'm not saying,
Yeah,
hey,
I
I'm here.
learned my lesson.
Okay. That's all that matters, as long as you learn your lessons.
Mm-hmm.
You know, hoping it didn't cost you too
Thank
much.
you.
No problem.
It did more than half my account.
As long as it wasn't the whole account. You gotta look
Yeah.
at the bright side. See, I'm one of the guys that look at everything like the cup half full. Shit, as long as I got $2 in my account, we're gonna turn that bitch to something. Any more questions? Let's see. Nope, that was it. And like I said, Bam, I will put out the replay. You need it for the first 3 weeks, right? If not, that's all right. I'll send them over to you anyway. We'll figure that out. But all right, folks, you have a great weekend. Okay, no, just this. Oh, this week and last week. Gotcha. All right, so yep, everybody have a great weekend. I will see you in the Discord. Remember, Roblox, check it out. Looking for calls, maybe puts. Got to check it out. But like I said, keep that on your watch list. That's going to be a gold mine. All right, my peeps, let me end this recording. Oh, that's not it. There we go.